Hello and welcome to this week's Closing Bell. We have a really big show today because Murray Dawes, opposite me, the star of the show, launched his new service, which we told you about last week, International Stock Trader, and it's been a smashing success, Murray. Is that true?
Yeah, it looks like people really do want to get involved trading offshore, so I'm pretty excited about it. It's going to be fun.
Well, we're going to talk about one idea that you're watching at the moment in regards to an international opportunity, some of the trades that we've talked about on the Closing Bell this week. And so let's begin with what are you going to show us on your charts?
Well, I thought in the interest of, the International Stock Trader and that sort of thing, I'd have a look at one that's on my watch list, one that I have a feeling people will know back to front, Uber. And Uber Technologies. And look, people might think, they've been around for years and, surely the investment opportunity has passed. But it's just not the case at all. It is really only just now starting to take off. And their cash flow really starting to kick higher. So I think they're really heading towards a pretty exciting moment because you just think how ubiquitous Uber is, right?
Ubiquitous, that's the word.
Yeah, just everywhere, and all over the world. And one of the main ones you'd think of, I know in Australia, in Melbourne, I'd just go straight to Uber if I need a ride. They'll be there in 2 minutes, Uber Eats, which is flying. And just think of all of the different revenue you can leverage off this huge brand recognition and the fact that everyone's got the app.
The data.
The data. And going into autonomous vehicles, which is going to increase, your margins and everything as well.
Imagine if they cut the drivers out eventually.
Exactly.
Yeah.
So you've got all of that coming. They've got same-day grocery delivery. So they've got this massive logistical network that they can then just keep leveraging off, helping out businesses do things, pharmacies, getting your stuff delivered to you from pharmacies. There's just all of these different avenues that they could end up going in. And the fact is their cash flow has gone from, $1 bill a quarter, 1.5, jumped up it's just in the last year to like $2.5 bill a quarter. And their cash flow is pretty close and was actually over their EBITDA. So, it's like 106% of EBITDA or something. And they're thinking that over the next few years, it's going to track around 90%. And that EBITDA is going to be growing at like 30% over the next few years, 40%. So you're looking at a company that's just really starting to after years of developing and spending money and lost money for years, and you'll see that in the chart we can see here.
Well,
just to quickly look at it.
Just part of what you're doing with International Stock Trader is, often we throw around ideas on the ASX, right? And so many of them are the smaller names, and most people would go, never heard of them, which is fine. Like, there still can be good opportunities, but the US especially just brings you the instant name recognition of like Uber, instantly what they do, what they're about. But what people may not know is how much money's flowing through their business
immense.
Until you actually look at the numbers.
And once you think of what the runway is for the company, and that they're just hitting their straps and they're just hitting that cash flow really starting to hit, and they're actually putting 50% of that cash flow into buybacks. So then they're probably going to do that going forward. They'll have heaps of money to keep investing in what they need. So if you're putting 50% of your cash flow into buybacks, that cash flow per share is going to keep going up because they're lowering the number of shares on issue. So that's going to be helping the stock massively as well, just from that point of view, from the sort of financial engineering point of view. So it's sort of, to me, I'm like, wow, this could actually be a real boomer. I'm just looking at the chart. And you're thinking, really, it hasn't done much for a long time, right? So that's July 2020. Right? Yeah. So that's to 2024. Okay, so it's only really in this last year that it's starting to move.
And one thing I know about US stocks, and I mean, you know this as well, but when they go, they can really go.
They can rip when they really start to trend. So people think, you're buying it at the high or whatever. What I want you to imagine is this has been in a range for years. It's kicked higher, but then also it's sort of been wondering, as this is how trends evolve often, they'll sort of create range above a range and sort of keep moving. So it's sort of at that point where it's like, okay, it broke out of that range and then spent the last year stuffing around. And now this is when cash flow's starting to really kick higher. So it's got, real business sort of growth behind it. This isn't just
real numbers. Yeah.
This isn't we think that in next year it might do this or whatever. It's like no, their cash flow is just starting to absolutely take off. So this is sort of like a building up of that shaking the bottle, shaking that Coke bottle. So you've got to be wondering with this. Are we actually looking at what will be the beginning? That this is actually just the very beginning. Imagine in a few years or whatever, we've had this big, long sideways price action. It's broken out. Now the cash flow is starting to really go. I mean, why can't this do this? And this is what those stocks do.
And if you think about the conversation around Tesla, where, I mean, the part of the argument, the bull case for Tesla going to 2,000 per share is autonomous vehicles and owning, that space.
Yeah.
But Uber has a genuine chance to either be a competitor or, co-owner.
Or to go work with them. And they are. They're actually going in partnerships with Waymo, for example. Or, and all these autonomous vehicles, they can be a great addition. The logistics, the getting everyone on, ordering the
And they've still got their
vehicle.
regular ride sharing.
Exactly, but their margins will expand because you're getting rid of the driver, all that sort of thing. There's all of that growth pathway as well. So it just feels like that breakout moment for the business. It's been around for years, but remember Amazon not making money for years.
For years and
years. And everyone's going, my God, why are they seem so expensive? But you look back now and you go, my God, why didn't I buy Amazon when it was still not making any money? But it was going up because everyone's going, wow, watch out when it does actually start to...
Part of that story was that Amazon, people saw it as, selling books and things online. And that took it so far, but it was their cloud service that eventually became the huge cash driver. So Uber, again, you just think, okay, it's Uber Eats and what it is. But if autonomous vehicles does take off, as people think, it could genuinely go on a monster run. And that's what you're talking about with international stocks, especially ones like this, where you just don't get that kind of upside.
I can't find a stock like that in Australia. No way. Because that's where, when I look at this, and I started looking at their numbers, looked at the last few quarters, and I saw the uplift. And actually, if you're interested, there will be a link. There's going to be a couple of links below the video. The first link will be to International Stock Trader. If you want to learn about what I'm doing there, check it out, have a read. If you've been liking these closing bell videos, hopefully I've given you a few winners. We had AV1 recently. Weebit, I told you about at $2.20. That's at $3. We'll talk about that in a minute.
Yeah.
But if you've gotten on a few winners and you'd like more, check that first link out below the video. That will take you to a spot you can have a read about what I'm doing there. But below that, there'll be another link, and that will be to just a chat GPT chat that I had before this video about Uber. So that will take you through a whole list of things that have been going on there. There's even charts I've got set up and even Excel spreadsheets you can take so that you can follow along what Uber does, seeing all the and there's charts showing you how they've been evolving the last few quarters. And it has been really impressive the way it is. You can really see it, how it's taking off at the moment. And there's a good reason why it's looking like it's at the very beginning of what could be a serious uptrend.
Well, it's exciting. And we should say, as far as the new service goes, you've already got 3 positions on, right? So that's the beginning of you building out the portfolio and that type of thing.
Yeah. So it's
exciting.
It's very exciting. Yeah, it's interesting to be able to sort of have now a whole new watch list of companies that I'm learning so much about, and quite amazing sort of sectors that things are going crazy in at the moment.
Well, we should say we've got the earnings coming out in Australia at the moment. There's been some big moves, and I'm thinking of CSL here getting hammered. James Hardie got hammered. So some of the bigger names in Australia have sort of hit the wall a bit.
There's been a few things blowing up recently. Sonic Health got smashed the other day. So because we've been in earnings season, and there's been a few surprises.
Now, you've told me not to agonise over this, but I looked at Zip and I didn't go for it, and it's done really well. But again, why has Zip gone up 100% since the low and is up 20% today on its earnings? Because it's in the US and it has that big growth market.
Growth runway.
They're doing it. So there's another example of another international stock listed out here. But
the trends. This is what I want to go after is just the strong trends. And I mean, why go after anything else other than the strongest part of the trend? So if these things, they can go on for years and years, much more than you'd ever think, and much more than happens in Australia. So I really want to just, get on these stocks that are really trending and try to ride it as hard as we can.
The other thing too is it seems to me the commodities stocks have got a little bit out of sorts. I mean, we had a little rip in lithium there for a bit, but I know my copper stock, Developed Global, had a big rip in, but it's sort of coming off the boil, and some of the other ones are just
I'm
a
wondering,
little weakness rolling through.
I'm wondering, is there some Russia-Ukraine thing? I've been wondering what the reason for that little sell-off was during the week. Talking about the Ukraine-Russia getting together, is there going to be Russia coming back online and selling their oil, and could that smash the oil price and other commodities as well? Could that be part of the story? I don't know, but we've got. Friday is the Jackson Hole speech, and that's a really important thing for the market, I think.
That's a yearly thing, isn't it?
It's a yearly thing, yeah. And the Fed has a chat, and they often use it as a way of saying something important about a change of view or a change of approach or whatever it is. And I've seen some really sharp reversals happen around that Jackson Hole speech when he surprised the market. So he could either inspire the market to really blast off further if he says, look, it is time to lower rates, because we've got employment figures were crap recently, and even the revisions were really terrible, which tells you that it's actually been crap for a while. We had like James Hardy getting smashed the other day, telling you the real estate over there is under a bit of pressure. 30-year yields, 30-year rates in America, the fixed rates, they're 6.7% still, because they're priced off 10-year bonds.
That's mortgages, yeah.
Yeah, so they're priced off 10-year bonds, really. And the 10-year bonds are still staying at a very high rate. So what interest rates do going forward is really important. And Powell's, in a fight with Trump, and he's trying not to lower rates, saying that tariffs are going to create inflation. And we've got Trump yelling at him, and the more he yells at him, probably the more Powell doesn't want to lower rates. So it's a really interesting time where they are starting to bite. The high rates are starting to bite, and we're starting to see some bad numbers. So the Fed probably should be thinking about dropping rates, really, from what we've seen in the last month or two. So it'll be interesting to see what he comes out with there, and whether he really inspires this rally to just go into exponential phase. If he says, right, we've really got to drop rates sharply because things are slowing down, things could really take off. Or does he, spark a bit of a correction, which is probably overdue?
Well, I know the dynamic in the US market is it's been driven by the tech sector. The S&P 493, as they call it now, isn't actually as strong as you would think just looking at the index, right? So he could lift that second half, or sorry, the rest of the market, I should say the second half, most of the market, by helping some of those sectors like real estate and that type of thing. So super interesting. All right, you were talking about a stock just before we started, that you wanted to show that was it Adveritas that you were talking about?
No, there's a couple that I've given. Yeah, this is what you've been getting just in the last few months. From watching Closing Bell. Here's one that is really taking off. Adveritas AV1. They've just come out this week saying they're worked out that they're putting their product within Meta's advertising product. So that's a really good opportunity, opening up a huge new market where they can help with the fake bot clicks, which can ruin your marketing budget. And so I think they're merging their tech with Meta. So I've got to read up a bit more on it, but that's just created another wave higher. And we actually caused this spike. See that little spike there? That was actually Closing Bell people. I remember on the Monday they went in there and bought the hell out of it. And then it had a retest of the longer term moving averages, you can see there. And then I actually, it was my last trade in the Microcap service I run. I got them in at around 10 cents just before it's taken off. So Closing Bell people, hopefully there's a few of you, up about 60% on that in a matter of months. And also the most interesting thing going on at the moment is, I've been talking about Weebit recently, saying that, watch out, it's a sort of stock that can really take off quickly. And I first told you guys about this in Closing Bell on July 20. You can go back and see. That was about $2, $2.20 around there, just when it was taking off. I said, look, watch out for this. It's actually starting to turn up. And there are a few reasons for that.
I think they got a speeding ticket, didn't they, from the ASX?
Yeah, and
just because they said,
I think the Motley Fool had come out and said that one of the brokers had got some huge number on their what they thought
projection.
it was worth, and apparently the report doesn't exist. So they caused buying. Then selling came in on that Monday, I think, last Monday, and then the buying just came straight back in. There's a big short position still, about 3%, not a huge short position, but it looks like the short position is being
Under
covered
pressure, yeah.
at the moment. So there is a chance this is a short covering rally which may peter out. So just for people who have been following along, how I'd see this evolving.
But again, we have the big carrot. Can they do a deal with one of the big semiconductors?
Exactly.
The most important industry in the world.
Yeah. Well, look, with this sort of thing, and the way you think about these things, at how I look at it, is massive total addressable market, let's say, massive TAM if they succeed. But the probability of success is probably pretty low. But in this sort of a stock,
Fat tail idea.
where they've got a massive total addressable market, they might be worth 20 billion, let's say, in 5 years if they can make it all work. Now, if at the moment their odds of success are pretty low, and let's say it's 5%, let's say for them to get absolutely be a world beater, it's going to be pretty hard. Let's call it 5% chance that they're actually going to make it, which you think is low. Maybe I'm being a bit mean on that. Maybe it's 10%, but this is just for a point to make. If that odds is 5%, the stock's at $2. Now, if something good happens, a good announcement, something good happens, and the odds of that then go to 10%, that stock can double. Because you've got this huge total addressable market, you've got this huge potential. Now, you're saying the odds are pretty low, and it's at, $2, the odds are pretty low they're going to succeed. But if something good happens, a good announcement, that'll be like, now it's like a 10% chance that it could succeed. That can then just go straight to $4.
Well, the validation of if it's important.
Well, just that, because you've just got that huge value proposition, and the odds changing a little bit can make the stock price.
It could get bought out too, right?
Go ballistic.
I had this is years ago now, but an Israeli firm called Dragontail that I recommended, and it was in the tech space too. And for ages, it just had this low valuation, and I never really understood why, because it was doing really well, and in the end, it got bought out. So that's another scenario that's easily possible with Weebit. But you can't predict that sort of thing.
And the thing is with this, look, we know that it's short covering going on. And the way I look at this is these waves, it's still trending down. So if we look at the long-term trend, just so people can learn how this all sort of works, if we're looking at how this thing has moved, sorry, I didn't mean to do that. All right. And we go from the high, I won't even go and do that yet, but we've got this downtrend. So it is all trending down, right? This is actually what's happening at the moment. So it still hasn't taken out the lowest high in that downtrend. So it actually needs to go above there to threaten that whole downtrend. So it can still fall over from here. You've still got to be wary of what's coming. And usually you have the selling pressure is in the sell zone of each wave, sort of thing. So if I was to talk about that, what I'm talking about there is that when we look at this selling off, if I'm looking at this wave here, where did it get to when it rallied? All right. So here's that down wave. On this rally here, see how it got really close to that sell zone? That's where you got to be wary. That area, that sell zone of the wave, is where the selling pressure will come in if it's still going down. So then we had another wave to the downside. So the way you'd be looking at this is where you're wary to be the devil's advocate to your own bullishness is to look at that down wave and say, right, well, how is this thing moving now in the short term, and where could we expect it to go? So based on that, the area where we've got to be a little bit wary is up around this 330 to 350, let's say. So that's where I think it can get to on this run, and but you've got to be wary that it can actually have a big sell-off from there. So as this turns around, you're thinking about this in the terms of what sort of wave structure is it going to have before it really takes off. And it could be something like that, where it goes up into that sell zone, back to retest the point, then it takes out that high, which says, okay, the downtrend is under threat now, and it could blast off above there, but you probably get another wave, shake everyone out again, before then taking off. So that's sort of, you've got to be aware of how prices move and the fact that they don't just go up in a straight line.
Well, let me
the downtrend is actually still in place. So you'd be de-risking basically on the way up to get yourself into a position where you're in a win-win position with it.
Let me spring one on you. Why don't you bring up DVP? Because there's an example. Because what I'm driving at here is that you have to work out whether you're in for the long term, in the sense of you've got to deal with the volatility, right? So DVP there, I recommended in January for my guys in ASI, and the dip when we had the big sell-off in April. Now you see the massive run it had.
Yep.
Then around the top there, they raised 180 million. I think it was at 450 per share. But as you can see, it's starting to sell down now. And that's just commodity stocks. In my view, it's just normal volatility. But of course, what was 100% gain is now slipping back. And
this is how everyone gets shaken out. This is how everyone gets scared.
Now,
so you have these waves, and then you have the pullback. And everyone who bought that all the way up, they are all feeling pressure at this point, right? Because if you bought it there, and you've seen it go all the way up there, you're going, yay, I'm actually killing it. And now when it's back down there, you're now nearly back at zero. You're feeling a lot of pressure to maybe get out and take the money and run, because you don't want to lose money, do you? So These moves create a lot of pressure on you if you don't have the conviction and, especially if you bought it in a bad spot. So looking at this one, it's so clear to me. I actually put this range in a long time ago. So there's your major correction within the big uptrend. There's your point of control here. That midpoint there is like the gravitational point around which prices will oscillate. You've then got your sell zone and your buy zone area of that correction. So that's where you're wary that it can turn down again to go back to the midpoint. And this is where you want to be picking it up if you're bullish, where it will go and retest that point of control again, where you de-risk. And you can see again, hit the point of control, back to the buy zone there. So now it's taken off and it's actually broken out above the high of the whole range. But this is why I have this area. See how I've got 25% there? That's the area where I think there's a heightened risk of a reversal and a false break, which then heads back to the point of control. And that's what we're sort of seeing here now. So if you're bullish on the company, you're probably a buyer back towards that point of control. And again, you're looking at the wave structure, right? Wave, back to the buy zone, wave, back to the buy zone. Here's your takeoff wave. And, it may not go all the way back to the buy zone, but it could.
Well, I hope it doesn't.
But you've got to be waiting for the pullbacks and finding the areas where you want to buy, and then you're waiting for it to turn around again before you get on again and say, right, well, I'm trying to join this uptrend and I'm aware of how uptrends evolve. Big shakeouts, putting the fear of God into everyone before it's ready to go on again. So,
well, if you're watching, I'd keep an eye on that one, because as I said, they raised 180 million at $4.50. As far as I know, there's been no news from the company, and copper overall is fairly bullish. It hasn't really broken out yet. But
I'm still long wire. I still like ETF.
I like copper thematic. So I just view that as normal volatility. But as you're right, generally with commodity stocks, generally you want to buy them on a dip, I think, unless the commodity's like really diving. But they're hard to do on the breakout, I find.
Yes. Any breakout. I hate buying breakouts. That's why false breakouts is what happen far more often than breakouts. That's amateurs buy breakouts, and they always get shaken out.
So anyway, one to watch there. All right, was there another stock that you wanted to talk about, or?
No, I think, there was one. Here's your little gift for watching till now. There was one little one I wanted to pass on. It just came out with its results, and a good example of technical moves. It's called High Pages, and it's an internet-based thing in Australia, doing like for tradies, getting in touch with tradies and even cleaners and, things you need to do around the home. And it's like a platform where people can get together. And also they have a platform that can help tradies with their logistics of doing all that sort of thing as well. They've got a platform to do that. So they've got hammered, from 22 to 23. So then again, you're waiting for the rounding bottom, when is it actually coming alive again? So I've been watching this. And you can see it's starting to take off. So what I look for here is...
and we should just say, as a general rule of thumb, the smaller end of the market is heating up, right? Like it was dead there for a while, and there's some stuff starting to happen now.
Yeah. And I mean, these guys came out with a good result. This is why they're taking off. So what I'm interested in here's your first wave to the upside. There's your buy zone of that wave. Here's things turning up, and I could show you the monthly, giving you the buy signals, everything going in there. So I won't tell you all the exact calculations, but anyway, you can see there, beautiful retest of that major buy zone, and now you've got a good result flying through to the upside. Look, there's going to be some resistance around here, so you're a buyer on the back foot is my view. But they've come out and they're I guess the jaws are opening up. Their operating leverage is starting to happen. Their cash flow, so their revenue kept growing, 12, 14% or something, but their cash flow went up like 100%. So going from like 2.5 million to 5.5 million. So they're sort of starting to get that traction. And that's the moment when you want to be buying these businesses, is when they're down and out. People are wary of them, but they've got really high gross margins, like 89% gross margin, and now they're starting to see the jaws open up, and they've got a growth
upgrade cycle,
pathway coming as well. So that one, there's your little gift, and that's for people who go and check out the International Stock Trader. The link below the video. You can't have everything for free in life.
No, absolutely not. All right, well, I think we can leave it there. Lots to chew on there, but definitely Uber. I'm excited by the Uber idea, actually. I'll be following that one myself, Murray.
There you go.
All right, well, we're going to go out today with a poll. You might notice that Murray is looking more hirsute than he has in the past. So we want to do a poll. Leave the comment. Does he look more like Kenny Rogers, the famous singer of The Gambler, Chris Christopherson, ZZ Top, or Papa Smurf? So have your say. And we will review the results next week, Murray.
Papa Smurfs.
How big are you going to go with that?
I don't know yet. We shall see. I'm thinking it might get big and bushy.
Could go Gandalf style.
Yeah, that's it.
Okay, all right. I'll look forward to that. Stay tuned next week, and we'll discuss more about Murray's beard and international stock trading opportunities.
That's it.
See ya.
See you later.